Welcome back. This is our Deals of the Week. I'm Ankit.
And I'm Jeff.
This is deals for the week of August 4th to August 9th. We're going to jump across to Newark first, see what's going on in that Essex County neck of the woods. Jeff, what do we got for these good folks today?
We got two deals over in Newark this week for our Deals of the Week. First, we'll take you through the assumptions, which, as last week, remain unchanged. We're going to go with 100% of the list price, interest rate of 5% on a 25% down mortgage, 30 years fixed rate. Your expenses, we're including our insurance of $1,500 a year, maintenance of 8%, vacancy of 9.1%, management of 8%, we said that, maintenance of 1% per year, and then utilities, $92 per unit. The first deal we have is 26 Taylor Street. This is a renovated two-family with an attic and finished basement. So the attic is part of the second unit, the basement is part of the first unit. That makes additional space and definitely more space in renting it out, so you get higher yields from that, even though they're only two-bedroom apartments. The currently rented, owner did value-added work. The last sale took place in May, so he bought it, fixed it up. It's now a completely turnkey investment, and I like the area as well. This is a North Newark area, so one of your better area, more quiet areas, higher quality tenants, and you have a good rent roll on the property currently at, I believe, $825 and $1475. So that represents the additional space in the basement and the attic there.
What are we looking at in terms of rate of returns?
Rate of return is okay, but again, remember our assumptions are at the list price. So right now we're looking at a levered rate of return of about 9.3% and a cash-on-cash return cap rate of 7.15%. So they're not phenomenal, but they're decent. That being said, again, looking back into the history, I mentioned that it last sold in May. That was for $72,000, so the owner did add some value, obviously, and he's looking for a return on his investment. However, based on my review of the last sale and this sale, I think that his asking price definitely has some room in it. So, did the math at 160, you're looking at over 11% return, and 150, you're looking at 13% return. So, I think, again, our assumptions are always 100% of list price, but I think there's room here based on the price that he picked it up at and the work he did, and your returns definitely go up when you can get a little bit of play in that list price.
So, like Jeff said, the list price is just our assumption, right? And our returns are based off of that. Your goal should be to get it cheaper than the list price, and we can help make that happen if you work with us. Or Jeff, what was the list price of this asset?
It's at 169.
It's at 169. So, like I said, if he takes it at 160, like he told you, it can go to 11%, which is not a bad rate of return. I think it's a good deal, but it's not. I don't feel it's the deal of the week from my side. What do you got else for them?
No. So again, the next deal. This is a little different deal than we usually pitched, but it just represents as a real estate investor, you have to be knowledgeable of the markets and look for opportunity wherever it occurs. This deal is a three-family in a not so great area, in definitely not so great condition, but it represents a wholesale play, which is a style that many of you may be interested in if you're looking for a quick deal for some money with little cash. This is a three-family, same style that a lot of investors are currently picking up. We've worked with some of those investors before, and we know that their criteria is always under $100,000. This one is listed at $59,500. So that may represent a good play. If you can pick it up even less than there, there's definitely some room in there to tag on a finder's fee for yourself as a wholesale fee.
So what do you think in there? What should be the ideal pickup price for somebody in that nature?
I mean, that's going to depend first on the exact condition of the property. The area is definitely going to be taken into consideration. I don't know whether there's parking or whether there can be value in different things like that, what the basement situation is, if there's separate boilers or not. So again, that's all going to have to be taken into consideration. But at $60,000 or so, you're looking pretty good. Even if you tag on a $5, $7, $8 wholesale fee in there, you're well in the range of investors that want to pick up these three-family properties for complete rehabs.
So, but like he said, Jeff said, it's not about being greedy. Don't tag up $15,000, $20,000, $25,000,
right?
Which is what investors might make when they actually finish the full rehab work. Be understanding that you're bringing a deal. Yes, you were forced to act on the market and be able to lock it up and bring it to an investor, which is great. But tag that $4, $5, $6, $7. Investors want to see you make money, but not equal to what they're going to make once they do all the value-add work and take on all that risk. So that would just be my suggestion if you wanted to go into this wholesale style of investing, a wholesale style of acquisition.
Absolutely. It's a great deal to get started, and you have to remember it is very low risk. You're not putting out any of your money, ideally. You're not doing any of the rehab work. You're not doing any of the lease-up work. You're just bringing the deal to the table, taking your cut, and hands off from there. So
I think that's definitely my deal of the week in terms of getting in, getting out, making a quick buck on it. It's not a bad location. The other deal, light on the rate of return for my taste personally, but I think definitely I would support this South 17th Street deal.
Absolutely. And if that's something that you're interested in, that's something we can certainly help you structure if you've never done so before.
All right, so we'll move over to Hudson County. We'll talk to Jersey City like we always do. We'll go through the key assumptions, which are a little bit different than Newark, just given the fact that it's a different market. So 100% of list price, still the same assumption, 5% for a 30-year fixed rate of debt, 25% down. We're looking at insurance of $1,500 per year, a 7% management fee for each month's rent. Maintenance is $50 per unit per month. And utilities, the assumption is $2,500 per year if it's not separated, and if it's separated, about $1,200 per year. And a vacancy rate of 7%, which is a tad bit less than Newark just because the area is a tad better. So, first one, both the deals that we got today is buy and hold investments. One's in Jersey City Heights. Both of them are in Jersey City Heights. One of them is a two-family asset. It's on Bauer Street, asking $189. It's a short sale that has been approved. It has projected rent rolls of $900 and $1,800. Given that, you'd be able to lever a rate of return of about 9.3%, which is about $8,550 in cash flow. You're looking at a total investment of about $90,000 to buy, do some value-add work to really achieve those projected rent rolls, and those are conservative rent rolls on the low side whenever we look at the market space itself. So you can earn about a 10% rate of return, assuming all the assumptions that we spoke about on this investment if you buy it for about $1.89, which is not bad. It's a two-family asset in a good location. But it's not a high rate of return, which you don't expect to see, unlike a Newark either. But we'll jump over to a three-family deal, which is on 266 Summit Avenue, also in the Heights. It's a 3-bedroom on the first floor, 2-bedroom on the second floor, and 2-bedroom on the second floor unit. This is a value-add play. The rents are low. The 3-bedroom is producing about $900, and the other units are producing anywhere from $500 to $700. They can really achieve $1,550 for the 3-bed, $1,200 for the 2-bed, $1,200 for the 2-bed, so you can accrete value to this investment if you pick it up at the right price. The asking price is $298,800. You're going to need to put in some value-add work because it's a little older style house. You don't have to do much in terms of separation of heating systems, but definitely upgrading of the kitchens, doing some cosmetic grade work to all the units. So you're looking at a total investment of $132,000, and once you do that work and increase the rents, your levered rate of return looks like 12.2%. 12.2% in the Heights on a 3-family asset is a good deal in my opinion. And that's definitely my recommended deal of the week. Jeff, what do you think?
I agree. I like that one too. I'm all for putting in a little bit of work to get that return up a little higher.
Right. So if you look at it, you're going to pick it up at a lower cap rate. If you pick it up at the asking price because the rents are low, but here's where the value play, you as the operator or you as the investor can come in, and obviously the value then of the investment or the property will be much higher than $298 also. So take a look at these deals. If you have any questions, feel free to call us. And remember, anything you buy with us or through one of our vendors, you get 1% cash back. So this is Ankit.
And I'm Jeff.
This is our deals of the week. Look forward to speaking to you guys next week.